Good day and welcome to yet another RandSwiss weekly wrap. As usual, we'll go over what happened in the last week and how it affects your investments. So starting off, we obviously had the big rates announcement coming through. South Africa basically raised rates to 0.75%. Expectations had been 0.5, but the day before we got a rather surprising inflation number higher than had been anticipated, showing that maybe we don't have a clear idea as to what's happening with inflation in South Africa as well. That means that the Reserve Bank probably had to be a little bit more aggressive just to basically accommodate what was happening. So we did see that 0.75% come through. It gave a bit of support to the rand. Earlier in the day, the rand had been closer to about 17.26 when the announcement came through. The rand eventually moved to about the 17.05 level or so. Now, in terms of what we are seeing right now with regards to the overall market, it was a reasonably positive week. We had earnings announcements coming from the US that were taken with a bit of positivity. I mean, to give you an idea, we saw Netflix come out with numbers this week showing that they had basically lost 1 million subscribers, and the stock basically rallied quite strongly on that news. Obviously, losing 1 million subscribers is not good news, but the expectation was for the loss of 2 million subscribers. So, losing 1 instead of 2 million is obviously a positive. And so it's a case of expectations being beaten as opposed to actual, real details coming through that are positive. Also in news this week, we saw the ECB also look to hike rates. Again, we are seeing quite a bit of pressure coming through in regards to, inflation in the European Union. I do think that going forward, we are going to be seeing quite a bit of pressure coming through, especially from fuel into the second half of the year. Speaking of which, one of the concerns this week had been around Nord Stream, this Nord Stream pipeline. The Russians basically, for those that don't know, sell their gas through a pipeline that goes from Russia to the European Union. And that pipeline had been down for maintenance due to a issue with regards to a turbine. The turbine was being repaired in Canada for some reason, and due to sanctions, there was questions as to whether or not that turbine should or should not be returned to the Russians. The Germans on the European Union basically asked for it to be returned. The Ukrainians, of course, did not like it to be returned, and that made a bit of a question around it. But the Canadians eventually did return it, and we are seeing the flow coming back. It's not quite a capacity; it's quite a bit below capacity, but it's still happening, which is important. The Russians make about 100 million plus a day in terms of euros from this particular pipeline because of payments from the European Union. So there are it's a significant source of revenue. 100 million plus a day. That's about 40 billion a year. In revenue, and even for the Russians, that's not insignificant. So with regards to the pipeline being online, I do think it's something that's positive at the moment. One thing I do think that we must think about is going forward. I mean, this war is getting more and more vicious. We're seeing civilian deaths. We are seeing attacks on infrastructure. We are seeing a lot of stuff happening here, and it makes me wonder how long will a pipeline in that region last. It's a pipe full of explosive gas. Rather vulnerable. It's hundreds of miles long. It's very vulnerable to an attack. So wouldn't be surprised if we are not going to see in the next little while some kind of move made against this pipeline, because from the Ukrainian point of view, it's a source of revenue. It's $40 billion a year, which is not peanuts. I mean, if you think about just how much aid the Ukrainians are getting from the Americans, for instance. I mean, one of their packages is $40 billion. The major package is $40 billion. So we're talking about a significant amount of money. It allows the Russians to buy a lot of stuff, equip a lot of soldiers and so on. And from the Ukrainian point of view, if they could get that pipeline out of action, it would be a big positive for them. Obviously, we've seen that that's what they want to have happen. They want that pipeline to be out of action because they've asked the Canadians not to return it. Whether or not they would be willing to go off and actually destroy it at the expense of alienating the people of Europe that are actually helping them at the moment, because without gas, Europe is not going to be very, very comfortable come winter time. Next year, maybe there might be an option for them to switch over to a lot more non-Russian supply, but at the moment they are pretty vulnerable. They will need Russian supply going into this winter. At the same time, if you never know just how coordinated the entire opposition to Russia is, and so there could easily be a faction that would take such an action, and that would obviously make a huge impact on the geopolitical situation. So that's something to keep an eye out, quite frankly, with regards to the pipelines and gas supply to Europe. Also out there at the moment, we saw some company releases, beyond like Netflix. Some of the earnings from, for instance, South African banks, where Nedbank came out with results. They showed a nice little jump up in terms of earnings, but basically they're getting back to where they were pre-pandemic. That's not a huge surprise. We also saw a bit of a jump up when we saw those interest rate numbers come out for the South Africa, when the Reserve Bank jumped up by 0.75 as opposed to 0.5 as been expected. Now, I think in the short term that does make sense, because we are seeing, more money being earned by the banks. Generally, when there's high interest rates, the banks can earn more money because of margins and so on. However, I think in the longer term, it's probably going to be a negative for them. Banks, in my model of the economy, are basically plays on a country's GDP. The more activity there is in the country, the more money the bank makes. The less activity in the country, the less money a bank makes. This action to raise interest rates quite strongly is going to hurt economic growth. We are going to see people basically having to default possibly on loans. We are going to see more bad loans on the bank's books. People less able to afford to borrow money, etc., etc. Or if they're forced to borrow money, they're going to be in a worse economic situation around it. So I do think longer term, this is probably a negative for the banking sector, but even though on the day we did see the banking sector jump up quite nicely. Also, in news this week, finally, looking at the oil price is hovering around the $100 to $105 a barrel level. That's Brent crude, and it's been there for a bit of time. Now, the US is continuing to release, oil from its, reserves. There has been some debate as to whether or not some of that should go to China or not, because at the moment they are actually exporting some of that oil to China, and there's a lot of political debate in the US about it. There are practical reasons as to why that's occurring, because of the fact that the refinery capacity in the US is limited, etc., for every grade of oil. So the Chinese could possibly do something about it, that oil that and actually release some pressure in the international market that the US would benefit from indirectly. But looking at the oil price right now, I do think that it's still under pressure, partly for things like, for instance, weak Chinese demand, which I think is going to change. Though Xi Jinping has come out and said that he's basically looking at having these lockdowns etc. in place for a period of time up to like 5 years. 2026, I think, was the number he talked about in terms of the year 2026. I think that China is facing pressures right now that are quite significant, which brings us to the China situation. China right now is experiencing quite a number of crises. I don't know if you've seen the videos, but there's video right now out on the internet of tanks on the streets of China. This could be from a couple of months ago. Chinese news is always very difficult to extract true news, not the propaganda news. There's also video out there of depositors at certain banks in Henan province in China, and one of his neighboring provinces as well, basically trying to go to the banks and get their money out of the bank. And there are, thugs, effectively, dressed up in kind of the similar kind of clothing, like white shirts and like black pants, but like very similar clothing, and attacking these people in line trying to protest for getting their money out. So what's happened here is people have deposited money in these banks, and the banks aren't paying them back. It's about 5 banks, I believe, mostly in Henan province, which is a central province in China. It has, I think it's the 5th largest province. It's slightly poorer than the other provinces. It's like 100 million people in it. It's not an insignificant number of people, but it's not the biggest thing in China. And these smaller banks have been basically offering high interest rates, etc., to attract funds in. And now, because of the situation in China with regards to lower growth, as well as an issue with the property sector, which I'll come to in a second, they have been unable to pay, and depositors are out of money. And the government has recently come in and said, yes, they're going to pay up that difference, which is obviously important. And they have paid the smaller depositors. But some people have put significant amounts of money into this, especially for an individual. We're talking people that have put in hundreds of thousands of dollars, and they may have been based in Shanghai or somewhere else, but they're using these regional banks for their high interest rate. And those guys will actually want to be repaid as well. This is not just a localized provincial kind of situation. It's probably going to be a countrywide situation just because of the nature of how the banking system in China works. So the government is coming in and trying to help them out of that. Like now I mentioned that the economic growth in China is under pressure. We saw the last figure coming out of China showing that the GDP number was lower than expected. That's a big surprise for China. China usually matches or more likely beats any estimate it has out there for economic growth. The fact that it missed is a rare embarrassment. The second thing is that the property sector is under huge pressure in China at the moment. The way the Chinese property sector works is that people basically pre-buy houses or pre-buy apartments, they pay for it, and then these things are built. Now, because of the kind of stuff we've been seeing happening like Evergrande and so on, a lot of these places are not being built. These developers are coming under pressure. They can't fulfill their promises. So people are obviously saying, okay, if you're not building me my house, I'm not going to pay you your mortgage. Unfortunately, the mortgage is not directly to the developer. It goes via the bank. So the bank is paid out to the developer. The bank expects the customer to pay the bank. The customer says, I'm not getting my items, I'm not going to pay. And that's going to be a huge issue for the banking sector going forward. Now, it's apparently a large protest. It's across about 80 different cities. So it remains to be seen just what the outlook there is. But China as a whole, I think, is under pressure right now. And so I would guess that their zero COVID policy might not last as long as some of the government had been saying. That being said, right now Xi Jinping is got so much power around him that giving him any bad news is quite difficult in China, and people are reluctant to do that. There's apparently a rumor out that last year's load shedding effectively in China carried on for several months before he even became aware of it. Imagine Ramaphosa basically only finding out about load shedding like a couple months after it started. That's the kind of situation we're talking about. And so is it possible that he's just going to blindly go forward with his policy despite the fact it causes huge stretch in the economy? But I do think that eventually China has to do something about economic growth, getting back on track, and that does not include basically locking down 100 million people every time a couple dozen people get COVID. Okay, so that's it for this week. Have a good weekend, and I'll speak to you guys again next week. Cheers.